Hey traders, and welcome to Jackrabbit Trader. My name is Steve, and in this video we're going to take a look at the markets for Saturday, November 16th, 2019. First of all, if you guys are new here, please head over to jackrabbittrader.com and check out our weekly process e-course. There's a link to that in the description box below. But also make sure you subscribe and hit that like button and the notification bell if you enjoy the video. We're putting new videos out every weekend, so just definitely make sure you don't miss any. With that said, if you're new here, again, we are looking first at our market cycles, and this is an area where we go with the SPY chart to look at how we need to be in sync with the market. And basically, I've developed a very simple process where anytime we're below the 21-day exponential moving average on the SPY, we're in a red market cycle, and anytime we're above it, we're a green market cycle. We've been in a green market cycle since the 12th of October, so just about a month, full 30 days. And now here we are just continuing to trend higher along this 8-day exponential moving average. So really, once we get our green market cycle, want to put risk on, and we want to make sure that we're trading to the upside, and we've been doing very well over the last 30 days. So here we are with Friday's close, pushing to new highs, 311.79 on the SPY after a couple weeks, or a couple days, I should say, of consolidation right in this 308, 310 area. So here we are, breakout, gapped up. And let's see now if this can continue. So still in a green market cycle and want to trade it accordingly. Looking at the SPY from a technical perspective, you go back and we've been looking at this broadening pattern, which appears to be breaking, but also now looking at a breakout from a weekly consolidation, and now this being the third week of that breakout. So again, market is very strong, right? We have 1, 2, 3, 4, 5, 6 up weeks in a row. All right, so probably getting a little extended as far as what we've seen in the past. You know, here if you look 1, 2, 3, 4, 5, 6, and then 7, 8, and then roll over. But back late or early 2019, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. A little bit of a pullback to reset, and then 1, 2, 3, 4, 5, 6, 7 more. So, where we are now with the market. Again, we have to keep riding this wave to the upside, but I want to do so cautiously considering where we are on this breakout and in this chart. I think we are due for a rest, and I'd prefer to see a rest for my process just going forward. This is probably a time that we want to be looking to take more money off the table than necessarily putting it on, but it's really hard to fight this type of trend. Again, look here at the daily. We've talked about this 315 level on the SPY that could easily get touched next week, but that would be the top of the channel and probably limit some gains going forward. So we took it from the bottom of the channel to the top, and let's see, again, nice little run. So just understand where we are. It looks like after hours, I'm actually doing this video on Friday, but it looks like after hours the ES is continuing higher, now trading 311.1 or 0.9. All right, so a little bit different, but continuing its upward momentum on the SPY. All right, and then let's take a same look at the Qs. Go back out to the weekly. NASDAQ, same idea. All right, third week of the breakout, just continuing to move higher. The diamonds, DIA, talked about that breakout last week, now continuing higher there. And last but not least, the IWM still holding up against this resistance level of around 159, 160, but has broken this makeshift downtrend line, but again, still in the top of this range. So we'll be keeping an eye on this, the IWM, seeing if this wants to roll over. Maybe this rolls over, takes the rest of the market with it, or does the other three indices pull the market higher? Either way, again, it's hard to fight this market here. SPY on our sectors list up 1.53% for the week, and 5.92% for the month. All right, so heading into the end of the year very strong. If we sort based on the weekly performance, we'll go through these real quick. And again, if you're not familiar with this, we're essentially sorting by the percent change over the last 7 days in the first column and the last 30 days in the second column. But the XLV healthcare names, and you will see if you watch our Trade Alerts video, there's plenty of healthcare names on the list, but healthcare names really just moving decidedly higher over the last 3 or 4 weeks. Now breaking to new highs over this 95.88 level. And, again, this was a good opportunity back a couple weeks ago to get long. And if you are long, maybe an opportunity now to add some risk now that we've broken out of this range. All right, so that was up 3.43% this week. The XLK, again, going back to the breakout that we had 3 or 4 weeks ago, just continues to move higher. That was up 2.67, and those were the only two outperformers of the SPY this week. The others, the XLB, right, continues to move, but finding some resistance around 61. The XLI, again, continuing to move, but not trading much higher than last week's high, right? 82.16, finished the week 82.31. The XLP, again, the staples, this would be an opportunity. This would be a time that you wouldn't expect the staples to move much higher because it's a risk-off scenario, right? Usually the staples move higher when you're looking for some defense names, you're looking for the higher dividend, the P&G, the all the Costco and those. So basically just going sideways here, but setting up for potentially a nice breakout over 61.50. We'll keep an eye on that as well. XLF found some resistance at our previous resistance level. Okay, right around 29.71. You could see that we came right up to it, have stalled. Next level would be 30.21 on the upside. The XLE continues to underperform. Right, this is the weakest of the bunch, I would say, out of all of the sectors. I think the XLE is the one you want to steer clear of until you see some type of higher high developing. But again, you could see that this 55.71 area is a pretty strong resistance when we highlighted that last week with these 3 white circles. A strong support, I should say. The XLU broke down last week. Here we are coming back, retesting 63. Let's see, does it get back into the box and maybe continue higher, or does this eventually roll over after breaking the downtrend or the uptrend and now maybe starting a downtrend? And last but not least, the XLY, which actually is surprising. I would think this one going into the holiday season would be outperforming, but maybe that's more of a early 2020 trade. But that's why we really don't try and predict what's happening. We just go through and look at what stocks are moving, what sectors are moving, and again, it's really hard at this point not to find something that's working. So if you've been in some trades that are you're up nicely, just make sure you're monitoring those and watching and have a plan for next week and even going into the end of the year to make sure that you're able to capitalize on those profits. You don't want to give those back after a strong run, but you're also not trying to pick tops here, right? We're just a very strong market. This is not the time where you want to go ahead and start trying to pick a top. This thing could run to 320 for all we know. But again, it's getting extended. We've spent many days above the 8-day exponential moving average. All right, very little pullback. And at some point, the longer you stretch this rubber band, the quicker it's going to snap back. So just keep that in the back of your mind. But again, just let these winners run and try and take some profits along the way. Other than that, definitely check out our Trade Alerts video this week. And for members, make sure you head on over to our latest portfolio update. Took some profits in a few trades this week, a couple on a nice earnings move. So definitely locking in some profits, and we'll continue to do so next week. Other than that, have a great rest of the week. And again, see you next week. Take care.